I joined Hyderabad Angels also as their employee number one. Indian startup sector is going to grow and there will be many more investors and there'll be many more startups in the years to come.
Right.
So the world is getting more and more complex and you need multiple skills. Passion alone is not enough.
What's the one red flag you see among startups in which you don't invest?
We see startups which are capital intensive. Startup requires many skills. It is missing in the company.
Hello everyone, welcome to another episode of Money Mint with Aditya. And today we have Mr. Sushanto. Thank you so much, sir, for joining us and doing this. So my first question would be like, what's your background and how would you define yourself?
So my background is I did my schooling and college from Delhi. Then I did my MBA, and then I worked for HCL, one of the first IT companies in India. That time it was making physical computers, hardware. And then I worked for Pricewaterhouse. I then worked for India's first software product company called SoftTech, started by 5 IIT Kanpur guys. So from there, I moved to finance. I was one of India's first equity analysts for IT sector.
Okay.
This was way back in 1994. And in 2000, I started out on my own as a consultant, seeing that technology and capital will have a lot of interaction in future. People from technology don't understand the financial world, and the financial world does not understand technology.
Right.
So I started doing consulting, and in 2007, I got an opportunity to join IIT Bombay as their first CEO for the incubator called Science.
Yes.
And I spent 5 years, and then I joined Hyderabad Angels also as their employee number one.
Oh.
And of course, when I started Lead Angels, now called Lead Investors, earlier called Lead Angels, we were India's first privately owned angel network. It was not India's first angel network. It was India's first. So I like, if I were to sort of summarize all this, is like I like doing new things which have not been done before.
Right.
And I enjoy, things which are uncertain and unclear and fuzzy, rather than the
Conventional.
conventional route or road, whether it was for career or for education or in my professional life. I've always chosen the unfamiliar road, so as to speak. Yeah, it has its challenges, but yes, so far so good.
So I would love to understand, like, why did you launch or founded Lead Angels, right? What's its mission? What's its motive?
Correct. So I see it's always accidental. So I was in the incubator at IIT Bombay, and I had put in my papers, and I was going to go and join Hyderabad Angels.
Okay.
And as I was leaving, so my farewell party, I was leaving IIT Bombay, and I really felt bad. Because I thought in my mind that I will never come back to IIT Bombay anymore. Not that I was a student,
Right.
Nor was I a professor, but still you get attached to an educational institute. And I really enjoyed being in IIT, meeting young students and professors who were doing research and stuff like that. Really from my, and if you know the geography of Bombay, Powai is North Bombay, and I used to stay in Bandra, which is about 2.5 hour journey.
It's south Bombay, yeah.
No, north is the first suburb of Bombay, but it's western suburbs. So it took me almost 2 hours. So I had 2 hours to feel bad about leaving IIT.
Right.
And of course, then I joined. So I thought in my mind, in that very day and that journey, why not start an angel network of people from IIT.
Okay.
So the startups can be from IITians and the people who invest. So then I'll keep on
So
coming
the
back.
idea came into the train when you were
No,
traveling.
I was driving.
You were driving.
Driving 2 hours
Oh.
drive from Powai to. So he thought, why not start that? But I was joining another job the next month, whatever, next weekend, so next day. But I kept that idea in my mind, and I started talking to my professors and other people, and everybody said, go ahead and fine. And that's how Lead started. But of course, the irony of the thing is that the idea that I started with and what Lead Angels now Lead Invest is very different. But that's part of the startup journey.
Right.
Yeah.
You first founded Lead Invest. What was the very first no you heard?
Yeah. So, in fact, this was actually how do you validate an idea, right? So, when I started, it was just, as I said, it was an emotional decision to start. The reason was not to build something. And saying, how can I keep on interacting with the young, minds, and how do I keep on coming back to the different academic institutions? So that was the real reason for starting out. But of course, at a rational level, I realized that Indian startup sector is going to grow, and there will be many more investors, and there'll be many more startups in the years to come.
Right.
And so that validated my sort of idea. And also, when I went to a country called Estonia, it had a population of 3 million and it has 300 angel investors. So I said that way, if I do the cross math to India, India's population, then India will have lakhs and lakhs of angel investors. So the market was, large enough. Of course, doing it in reality is, of course, execution is the key rather than this number. But yeah, the idea was that Indian startups will become many more than they are today, and therefore you will need more angel networks, and I could be the angel network. But the first no was obviously from the start, because when I started Lead Angels, there were other angel networks, and they are all also there today, and they're doing very well. Indian Angel Network, Mumbai Angels, and so on.
Right.
So whoever wanted to become an angel investor was already an angel investor.
Right.
In a market potential thing, there was zero potential of what I was going to do. Right. So that was the industry, the way industry was structured was a no.
No,
Right.
right. The first no, right?
Yeah.
Okay. And what was the very first check you wrote?
I think it was a company which was in creating venues for listing of venues for weddings.
Okay.
And a very interesting story. That company did well because weddings is big business in India.
Yeah.
And then COVID came, so they almost shut down because people stopped taking on venues. But the founders, persisted, so as to speak. And today, that company is profitable, doing well, and of course leveraging the growth in the wedding industry in India.
Right. Okay, so I think you have invested close to, your company has invested close to, I think, 100 plus startups, right? So what's the one red flag you see among startups in which you don't invest?
So when we see startups which are capital intensive, we typically don't invest.
Okay.
If we see that the startup requires many skills, uh, and it is missing in the company, in the founding team, then we don't invest, because we realize that because the world is getting more and more complex, and you need multiple skills. Passion alone is not enough. There has to be some meat behind that passion, and that's where we do. One of the things that we really that it is disruptive, yes, but the uh, the tailwinds in the economy or society is actually pushing that forward. Uh, I'll give you an example that we invested in a company called Chefcart. Chefcart provides cooks on hire.
Demand, okay.
Right? And we felt that so it's a disruptive idea.
Right.
It's fine. But the social changes that are happening, people are living away from their homes. They are typically living in, Gurgaon, and Bangalore and so on, away from their native place. And how much of food ordering that they're going to do, managing cooks is difficult. So these are the trends that are happening. Many families are living in two cities. The husband is living in one city, the wife is living in another city. So they don't have somebody to manage the home.
Right.
Or keep very late hours. Right. So societal changes are actually helping the company. So we typically invest in a disruptive company where where the social and economic changes are a very strong tailwind for the business.
Okay. So I think in this particular business, it's solving a very important problem.
Yeah.
So if anybody is listening or watching this, they should solve an important problem. Not, I think, not according to you, but according to the market, right?
As they say that you should make a painkiller and not a vitamin pill.
I would like to know more, like in what more companies you don't invest in, because that's the key. People are watching this; they want to know, like, in which why you don't invest in particular businesses, apart from
Yeah,
being
one is
capital
of course,
intensive.
the other is the standard sort of thing that it should be scalable. The classic example is that if you have a grocery store and Zepto. Now, Zepto is a scalable business.
Right.
A grocery store is not a scalable business, but they're providing you the same thing. They're providing you grocery items, but one is a scalable business, one is not. It's very important it might be a good personal business to do or a family business to do, a grocery store, but it's not great for an angel investor to invest in a grocery store.
Right. And I think again your point that it's capital intensive to grow
Also,
the grocery store.
usually it follows.
You run various chapters in different cities, right? And what's the one regional micro trend that is hiding in a plain sight where people can build a very good business?
So I think that as Indian economy develops, I think there are a lot of services which need to be. So India is going to get more and more branded. Means why should doctors' chains not be branded? So when you go to a doctor's clinic, you're assured of certain level of what is brand? It's basically you're assured of a certain level of service. So when you buy something from a well-known brand, then you know that it has gone through certain quality checks. That people trust that brand and so on and so forth. So you're comfortable in. But where you are going to a doctor and you are saying, sharing things which your life depends on it literally, you're not assured about the quality of service, right? So that person may not even be a doctor in the Indian environment. He could, So we don't do that. So there is a need to have, say, branded doctors and branded, and if I just extend that idea, branded maids, branded drivers, and so on and so forth. So a lot of branding, because in India we are worried about quality, and the only way that organizations can create consistent sort of solve this problem is by building an organization which takes care of this variation of quality between doctors, maids, and so on and so forth. So I think that is a big trend that will happen over the years.
And I think it's companies are already solving that. For example, urban companies.
The company that we have invested called ChefKart, they're all. I think now they've also come up. Urban companies come up with maids on hire. In urban, metros like Delhi, Bombay, and Bangalore, this is very important to to have these things.
Right, right. And I think you also invested in a company called ShopKirana, right? And I think in earlier days it was not a very good business. It was not scalable. So what changed? How the founder survived?
So I think first thing is to say that Indians are a known country of shopkeepers, as they say.
Right.
We are a country of shopkeepers, and what was happening is that modern retail,
Mm.
chains, they were disrupting their business because they could buy in bulk
Mm.
and get the economies of scale, which the small mom and pop shop was not able to do.
Right.
So the idea was if they aggregate their demand, then they will be able to offer the same pricing as the big brands.
Right.
The challenge was that whether what is the capital intensity of that business. So do you create warehouses? Do you create trucks
Right.
and so on and so forth? Or do you hire? And they went through that same thing,
Mm.
that they went and built all these things, and they realized that it's too capital intensive for the business to scale. So they moved back into using this as a sort of pay-per-use model, and thereby they became. And the interesting thing is, they went to Bombay or Mumbai and they were not successful because it may not work in a tier 1 metro, but in tier 2 metros like Indore and
Right.
and Jaipur and Bhopal work like a dream.
Right.
So
Right. So I think they figured that out, right?
they figured that out.
And again, your first point came true that if it's a capital intensive business, then you have to think really hard. Can you scale this?
Yeah. So some capital intensive businesses are scalable, but not all.
Right. And I think you also said that capital alone isn't enough.
Yeah.
So what's the thought process behind
Yeah,
that?
in the sense that, the person who is giving you the capital, it could be who is giving that money is important. So if your father is giving you the money for your business,
Right.
it has a different connotation. A money lender is giving you the money. His expectations and the value that he will add to your business or she will add to your business is different. And their expectations are different. So capital is the same money, right? Same amount of money. But who is giving it to you? What value they will add? What are their expectations of return? Will determine how you succeed and how you manage that relationship.
Right. Right. I think I would also like to, dig deep into what's the framework for raising capital, because you have been at the other side of the table.
Yeah. No, so I think so we have this common saying in our world, is that when you ask for money, you get advice.
Right.
When you ask for advice, you get money. But in a different way, what it tells you is that you should not look desperate for money. In saying that this is a business I'm doing, it's doing well. We are anyway doing it. We are not dependent on your money. We're not desperate for your money. But my business has a great future. You can participate.
Right.
So that is one. The second is that it is a sales job. That means it's as, when you're selling, pitching your company for raising capital, it is equivalent to pitching a product. In this case, the product is your company's shares.
Right.
So you have to make sure that, just like a shopkeeper makes sure that he is able to share all the benefits of that product, we should be able to prepare that pitch and be able to pitch it to the person, because it's a sales.
Yeah. Every founder should
Has
know
to be how to sell.
how to sell, right? Because you have to sell your idea to investors, you have to sell your product or services to customer. So it's a mandatory thing, right? And let's suppose there is a founder who is not a salesperson. What should he or she should do?
Yeah, so I think there are two parts. One is that there is a common belief that a person who's an introvert is not a good salesperson. So that myth has been broken.
Right.
So the founder doesn't have to be an extrovert to be, but if he may not, so it is not about being extrovert or introvert. Every founder has to sell. And if he does not like selling or she does not like selling, then I don't think that they should be in. There are other roles that he or she, and it could be an entrepreneurial role. So you could be the CTO of a company, you could be the operations head, manage operations of the company, but you cannot be the CEO of the company.
Okay.
Is my belief.
Right. But I think I can also relate to that. And I have seen people who are not very good at selling and they couldn't make it. So there is some truth to that,
typical
right?
techie person's sort of hand at, he or she thinks that if my product is very good and it has all the features that and more plus one feature in the market, people will line up and buy it. They don't. Right. So you need to be able to take the benefits of the product to the market. So that requires selling, right? How will you know that my product, that the product that I have developed is super? Only when I go to you and tell you that my product is super, right? Otherwise, how you'll never.
I think selling is non-negotiable, right? As
Absolutely,
a founder.
as a founder, yes.
Okay. And there is something you run called Huddle Hour in the morning. And you have been doing this from past, I think, 8 or 10 months or 1 year, right?
Yeah, about 10 weeks or something.
10 weeks, right. And you give 30 minutes of uninterrupted time to founders. So what's the one insight that you have gained from talking to a variety of founders?
So what I think is that founders are not taking advantage of the infrastructure that is around them to seek advice. They come to us to seek advice when probably that advice is available from a family member or a friend or a friend's friend to help them in their business. I think it is a little bit of founders' arrogance that I know everything and I don't want to sound silly in front of somebody else asking them advice.
Right.
So I think that, and perhaps the younger generations are less willing to ask their family members and seniors about something. Again, feeling that I look not confident, I will look small in some way.
Right.
So I think founders should be able to sell and should have no shame.
Right.
I think you have to become shameless if you want to be a founder.
Exactly. Rightly said. And I think I would love to know what's the one piece of advice that you have gotten from a mentor in your life, which has worked really well for you.
Not particularly. Is that you I would say bad times don't last.
Right.
That life is, whether it's for a founder or it goes, and for a founder most days it's a down. So you have to make failure a part of your DNA. Because if you can't handle failure, you cannot be an entrepreneur, because an entrepreneur faces failure every day.
Every day, right. Exactly. I think I would love to know what's the one piece of advice every founder should write it on a post-it note and use it daily.
Yeah, I think this is what I said before, that you have to make failure your friend rather than your foe. That failure is a friend, that you learn from those failures. Failure is inevitable.
Right.
But the more you learn from your failure, the more likely are your chances of your success.
Right. Okay. And I mean, people do startups, right? I hear about everyone starting up these days. What's the average time they should spend on the idea they are working on? Because I think everyone is in a hurry, right? So that's where this question is coming.
Yeah, sometimes, no, it's true. Sometimes you are too much of a hurry to launch the idea. There's peer pressure. There's a pressure of, but I think So it's not a straight answer. It's a nuanced thing. You could analyze it for years and not do it at all. So
Right.
that's one, because it requires a leap of faith.
Correct.
So you what is the right time to start? But a lot on the other side of the story is that a lot of people don't really see what is competition, what are the business economics, how much cash will we need,
Right.
and then figure these things out. You want to be in the business? Yes. You want to start something like this? Fine. You don't need to get cowed down by what other people tell you about it.
Right.
But your homework you must do before you straight out.
Right.
Don't get influenced by others.
Right.
But you must do your own homework before you start.
Right. Right. And if let's suppose a 30-year-old wants to be an angel investor and he wants to write or she wants to write a 10 lakh rupees check, is that feasible in today's environment, or you would advise against it? Like don't
So I
pick
think
that
it's
route.
the same thing, that startup investing should not be more than 5% of your overall portfolio size. And if this is one investment you're making, you should be able to make 10 such investments. So therefore, you have to invest 1 crore of rupees.
Right.
And that should not be more than 5% of your total. So you should be looking at investing 5-6 crores
Right.
in the next, say, 2 years to invest that 10 lakhs into that startup.
Right.
So I would say majority of startup investing would not have happened, because it should be a small part of your portfolio. It should not be because he is your brother, sister, blah, blah, blah. It should be, even if it is, it should follow that math.
Right. And because it's a risky investment.
It's a very,
right?
very risky investment.
Right. Right.
And that is why the experience of investors in startups has not been good in India. And this is what we are trying to change, in saying you must have startups in your portfolio, because that's where the rich make money.
Exactly.
The rich make money in the unlisted space. Everybody now, that is today with Lead Invest and others, the average Indian can invest. An average executive, corporate executive can make investment, but the ticket size has to be right. He has to do it in a scientific or a processed way. It's like any other investment that you would make. It is not say for the rest of the things I'm going to analyze, but for startups I'll go by passion. No, that doesn't work. However passionate you may be about startups, but money is money. So we have now created what is Lead Invest Next Gen, is a product for people, corporate executives who don't have the time or the expertise, but they're willing to put aside a certain amount of money, just like they do in SIPs.
Right.
They could put out a certain amount of it, and we will invest that money for them in startups, so that they have an portfolio of startups, and yet they don't make the usual mistakes people make in startup investing. This is again same thing 10-15 years ago, before the advent of mutual funds.
Mutual funds, yeah.
People used to make stock market investments, again, exactly by friends and family influence.
Right.
And again, people lost a lot of money in these stock investments. And Indians started making money in stock markets once they started investing in a scientific way through mutual funds.
Exactly.
And that is exactly what we're trying to do,
Right.
to change the way startup investing is happening in India.
Right.
At the individual level.
So as we were talking about, we should invest correctly because it's a science, right? And I wanted to understand a case study where you had a very good exit in a company you invested in.
Yeah. So in fact, one of them is ShopKirana.
Okay.
We had a very good exit. So it met certain criteria that this was a problem that mom and pop shops, Kirana shops were facing due to the advent of these chains like More and Jio and so on and so forth. They were not able to compete with them.
Right.
And this team found a way of aggregating their demand, and therefore now these people could, if they united, they could stand against the big guys,
right.
and transform that industry.
Right. Do you remember your exit? I mean, in X amount?
Yeah, it's about 22.5
Right.
times
Right.
the money that we put in. So,
Right.
or I think about 25
Right.
times
Right.
roughly. Yeah.
And is it an average, return in the investments you make, or
No, they
Mm.
they vary.
They vary, right?
So you could make 3x.
Right.
Sometimes 3x is also a very good return,
Mm.
because we have to remember that most startups fail,
Right.
and it's a few of them
Mm.
which will give you that 10, 15, 20 times money,
Mm.
which will make up for the losses that you make in others. So it's
Right.
different from stock market investing. Stock market investing, if you invest in 20 stocks, most will give you money, some will give you more money, some will give you less
Less
money,
money, right, right,
and one or two of them will give you negative money.
right.
But that's how the ratio is. Here it's exactly the opposite.
Hmm.
Only 2 or 3 of them will give you huge amount of money,
Right.
and the rest will actually, you lose all the money that you have invested in those.
Right.
And that's one more reason why you have to be rational and structured in startup investing. You can't invest in one startup company and hope that you will make a 10x,
Right.
because most likely 80% that you will make zero out of that.
Zero. Right. Exactly. And I recently met somebody who said that uh, reinvention is non-negotiable. Reinvention, because the idea was that when you are at the peak, right, you should reinvent
Right.
before your downfall, because after every peak there would come
Yeah.
a very steep
Yeah,
fall, right?
absolutely.
So I
So
would
that is
love to.
absolutely true. See, in startups, disruption is happening every day,
Right.
right? What is today's cutting edge is tomorrow is already blunt,
Right.
right? And startups who don't innovate and who do not pivot as the market changes, and in fact, I would say that most startups go through multiple such stages before they succeed and can get established. Once they get established, they're no longer a startup, so as
Right.
to speak, right? So
Obviously.
they have to keep on disrupting the way they do their business, through whether it's through operational innovation or technology innovation. Otherwise, everything can be copied today, right? So you have to keep on, you have to run twice as hard to stay in the same place.
I would love to know more about the companies you have invested in, and if there are stories which people have not heard, which will help them in their journey, it will be great if you can share some.
Yeah, so you mean one is how companies have succeeded,
Right.
right? And what is the principle, or what's the learning from that
Right.
experience? So I think story here in Delhi itself, a company called PlanetSpark.
Right.
They were providing English learning and other sort of skills to young students, and they were doing it through rented places in Delhi colonies,
Okay.
Oyo hotels, other hotels, banquet halls, and so on and so forth. And of course, then COVID came, so naturally you cannot do that anymore, right? So one is to give up, because that's the end of your game, right?
Right.
And the other is to provide that same thing through the internet in some fashion, right? Of course, now we all know it's ed tech and blah blah blah, but for them it was a great uh, pivot forced by circumstances. But that is what really scaled the company, and they were able to reach out to tier 2, tier 3 cities with their education program, which was otherwise they were limited to a particular geography. But children are going to come from even far away from Delhi to learn English, right? Only you're talking about a very small localized market. From there became a national market, right?
Scalable, like you told us that it
Yes.
should be scalable.
And that, the company is doing very well. And then I think Fitji invested in their company, and today the company is valued at where we invested. They valued at about 100 times of that.
Wow.
And we invested at the brink of COVID, so it could have become
Either
zero
way, yeah.
also. Yeah.
Yeah.
So that is interesting pivot, I would say, that things will change, things will go bad,
Right.
and the way you recover will determine your success. So I said earlier on, is that you have to make failure your friend.
Right.
And
And I
then
think again that part that it's reinvention, right? Is
you have to
one
reinvent
mission.
yourself uh, every day. I think we should learn from a politician. Every election they're able to reinvent the
Right.
story.
Right.
Trump and so on.
Yeah, right.
How
Exactly.
how they have managed to by
Stay,
reinventing themselves for the new world.
Right. I think you also invested in a company called Planet Superheroes, right? And they were the first to get a deal from Marvel, from what I remember.
Yeah. So of course the company got acquired. It did not scale the way we had planned it, but they were able to see the trend that young people, children, especially young children, they're very influenced by the cartoons and stuff that they watch.
Right.
And there's a huge business around that, and that is possible in India. It is possible in India. Perhaps what they underestimated is the power of piracy in India,
Right.
because the same T-shirt that they were selling, the licensed T-shirt, they were selling for say 2,500 rupees, is available for 50 rupees on the streets of Sarojini Nagar and places. So those were the challenges, but they could see the trend of merchandising cartoon characters and related stuff.
Right. And I think there are multiple companies that are doing it now.
Yeah,
But
now it has become because as media spreads, more awareness will grow, and that's why those merchandising opportunities will grow. Today, every movie star has got 2-3 brands that he or she is promoting and pushing.
Right. And I think cricketers also have their own brand. So
All these
everyone is
personal
doing that, right?
is leveraging that.
I think you also invested in Aha Taxi, right?
Yeah.
But I think at that time Ola and Uber already were in play. So what was your rationale behind investing in these companies?
This person was solving a very important. So in those days,
Right.
when you would hire a taxi to go to say Jaipur from Delhi, so you have to pay for both the ends. That means you have to pay 2x.
Right. Right.
So they realized that and Ola and Uber were offering this service. They realized that when a taxi takes you to Jaipur from Delhi, he is waiting there to get the next journey he's looking for passengers who are looking to get back from Jaipur. Because let's assume that Delhi is his base of that taxi driver.
Right.
He also wants to come back. So he may be willing to go back to Delhi at a lower price than X, right?
Right.
And this is only possible to be solved if you put this on a database where people who wanting to come back from Jaipur to Delhi are listed, and if you are in Jaipur and wanting to come to Delhi, you as a customer can find those drivers and therefore be able to come back to Delhi at a lower price than you would. Don't have to pay 2x.
Right.
So he was able to, of course, over a period of time, Ola and Uber also started doing the same thing. And they also figured out that you don't have to do it at 2x.
Right.
They started charging 1.5x, etc. So everybody benefited. The customer benefited, the taxi walas benefited, and of course the company got the commissions for.
And how is the company doing now?
So the company got acquired by Ebiz.
Yeah.
So they got acquired and they're doing it. So
Right. So I think you have invested in variety of companies, right? From what I can concur. What's the one thing that is you would tell that like it's similar across all the companies or all the founders?
Good question. But of course, one is that every founder is different and every company story is different and so on. But I think what is common across all founders is that they have taken a leap of faith where there would have been many people who would have told them that don't do this, don't start out. It doesn't make financial sense.
Right.
Which science engineer, if you do a mathematics of it, that how much will you earn in the next 5 years by working for a company or starting out on your own,
Right.
the math is very clear. You're better off working for a company.
Right.
But those guys had the confidence in them, and most of the startups are founded by engineers and so on and so forth, or MBAs. For all of them, the math is negative, but all of them started,
Obviously.
and of course, some of them succeeded.
Right. So as you have invested in companies, some of them might have failed, right?
Have failed, yeah.
Have failed, right? Is there a company that was on the brink of failure, but it reinvented itself or disrupted itself, and it became a very good success?
I just spoke to you about PlanetSpark.
PlanetSpark, yes.
And I would say this is the common thing that every startup goes through, this nightmare situation.
Right.
And it may not be just once, maybe multiple times in their journey. And only those who are able to handle all those situations can survive and do well.
Right.
So it's a common theme across all successful startups.
Right.
And today Google is getting disrupted
Right.
by
AI,
ChatGPT and so on. They have to reinvent themselves. So it's not, even company as large as Google has to reinvent itself, right?
To stay relevant.
Yeah.
Yes, correct. And I think one thing which I am thinking is like, what is the right time to raise money from investors, right? Because I think that's a tricky question.
It's a tricky question. So thanks for asking tricky questions. So I think that some businesses require money, right? You can't live on love and fresh air and start a business, right? So the point is that from which investor you have to take money when. So what we say is, first is your own little bit of personal money of friends and family who will go not by your business plan, but the trust that they have in you. Right. So maybe your father or your elder brother or your rich uncle in the US who will put out that first check. And that is more faith money. It's not really an angel investment and so on and so forth. And then when you have reached the stage where your product is ready, that's the money really in India you build to have the product ready, maybe have the first beta client or the first customer. That's the time when external investors will be appropriate to take you to the next level. What I forgot what I missed out is that today, unlike in earlier times, there are incubators and accelerators and government programs which you can leverage. Again, it's almost like friends and family round, and sometimes it's a grant, sometimes it's a loan, which will help you to build your product market fit and get your first customer, because that's when institutional investors will start looking at you, such as angel investors. I hope that answers the
I think the crux of it is that once you are making money, then only you should raise money from investors.
Once at least your product, if not making money, at least your product is ready. Of course, I don't mean to say for all 100%. There are obviously exceptions. If I'm going to make a rocket which is going to go to the moon, metaphorically, I need all the money to build that rocket, right? So those are the outliers, but in general. And so if you have put in some money of your own, then your uncle and your father will have more faith in you. When they have put in the money and you have achieved the next goals, then other investors will start having. So it's a question of building trust over a period of time.
Right. Understood. And is there a time when you learn from a young founder, you thought like, I mean, you have learned from this particular person more?
It's all the time. I think the entire startup world is largely built on the disruptions 24-year-olds made.
Right.
So all the big stories that you see, whether in India or globally, is all these, metaphorically speaking, 24-year-olds who've taught big guys how to do business. Today, Hindustan Unilever is acquiring, different minimalists.
Yes.
They're all 200-year-old companies buying products from 24-year-olds. So they are teaching everybody to do business.
Right. Okay. On a closing thought, I would love to, give you, I want you to give advice to a young founder or a young entrepreneur who's watching this. What would be a critical piece of advice for them?
I would say that not only a young founder or everybody, whether a student, should give entrepreneurship a shot. Means entrepreneurship is a human quality which is there in different proportions in different people.
Right.
But maybe you're an entrepreneur, you don't know it. Right? So give it a shot while you're a student, so that it doesn't affect your future life, so that you don't even have a regret later in life that you didn't give it a shot.
Right.
Give it a shot. Doesn't work. Fine. And today, the corporate world actually appreciates founders who have not succeeded as their potential employees, because they are more innovative and disruptive than the average run-of-the-mill employee.
Right.
So give it a shot. Whether you're a housewife who has an idea, or you're a student or a person who's retired, give it a shot. These are the best years for India, next 10 years from the economy perspective. So there'll be lots of successful entrepreneurs, and maybe you're one of them. Why not give it a shot?
Right. I think it's better to take a shot than live a life of regret, right?
Regret.
Yeah.
Absolutely.
Yeah, you all should listen to this advice, obviously. So, coming back to our rapid fire, which is our last section. Okay, so we'll start with the rapid fire. Best founder cold email you have received, which you have opened, right? What was the subject line?
I wouldn't remember exactly. What you're, but in today's world, you are bombarded with so much of mail and social media and so on and so forth. So you have to create FOMO in the title, in the very first word or the very first title itself.
Right.
And hope that the person sees it. So I think it's like that. And there have been situations like that. It's usually that the person is able to empathize with your situation. The classic example is that of that Nigerian scam, right? People who are chartered accountants and people in the police who open those mails and make those mistakes, because they realize that every person goes through moments of depression. And that's when a story like that so-and-so has left, becomes believable for a while.
Right.
And that is what they capture.
Right.
And which in their rational sense, the people would not have done.
Right.
I know of CFOs of companies who've opened and fallen prey to those mails. In normal circumstances, they will not. But if you're bombarded with those mails, if you bombard enough of those mails all over the place, there will always be a person who will pick that up. And that's true for any email.
Right. But I think what I understand from the story is that you have to stand out, right?
You have to
either through a story which is emotional,
and which is emotional. So what sells the most is emotions, right? So you have to. Our politicians have taught us that, right? So you have to hit on the emotion. So the title itself, and given today's lack of attention people have. You have to be emotional in the very first subject title.
Right. Right. Understood. What's the one sector which you are seeing emerging where you would personally bet your savings on?
Yeah. As I'm getting older, it's obviously health services, but more than that, I think the health serv- services and health in general is going to go through huge changes with the advent of AI
Right.
and research from what it was, say, 5 years ago. And we will probably look at individual medicines for each person rather than what we call generics.
Right. Medicine for everyone.
Yeah.
Right.
So I think that, and historically, we have seen that health services costs have grown faster than inflation. So
Right.
we think that health services, pharma, elderly care, because the lifespan is increasing, so you need elderly care.
Right.
So these are the things.
Right. I have bet on elderly care. There's a
Yeah.
company called Max Limited in India. They are doing good. I can relate to what you are
Yeah,
telling me,
because
right?
that is it's like a very strong tailwind to that industry, right?
Right. Okay, books that have changed your life.
Again, it's but of course, I think I read a book called The World is Flat.
Right. Yes.
So that is one. There are a bunch of books, I don't say, but yeah, a lot of the trends that you read in those books may not have come true then, but they're coming true now.
Right.
For example, The World is Flat is was came maybe 10 years before COVID happened, but the COVID really made the world flat, right?
Right. It made sense in the future, right?
Yeah. So a lot of these books, you're able to see trends that will happen in the future when you read books. So again, I would say that founders must read books because they get to see how other people are thinking, and that will help them.
Right.
In.
Okay, so next question would be: are you a morning or a midnight person? How
Okay.
does that work
so
for you?
So I think I used to, be a night owl like all young people, and during COVID it was more,
Late night.
awake. Yeah. I think that, but each person is different. But I'm more of an evening person. I think after my day is done, and I can sit back and think. That's the time when my best ideas come. It's not in the morning, not in the evening, not at night.
Right.
But the best ideas come when the the stresses of the day are gone, and yet your mind is still fresh to look at things. Otherwise, in the morning, we're in such a great hurry, you can't really sit back and ponder about something.
Right. So thank you so much, sir, for doing this. It was very inspiring for me to listen to your advice, and I hope audience listen to it and applies to it and build great
Thank you. It was
businesses.
great talking to you, and I think that I would just repeat what I'm saying is that India is a great future, and startups will dominate the world, and in whatever capacity you can, if you can give it a try, it's well worth it. You will learn a lot. You will become either learn a lot or earn a lot. One of the two. One of the two things will happen.
Right. Thank you, sir. Thank you so much.
Thank you. Thanks.